Welcome back to Investing Talk Podcast. Today we're tackling a question many of you have asked, one that really gets to the heart of biotech investing. Is Galectin Therapeutics a good time to buy now? We're going to break down everything you need to know about this company, drawing from the latest reports and analyses we've gathered. Our mission here is pretty clear: give you a comprehensive, really crystal clear picture so you can understand what's driving its movements and what you really need to consider. And hey, before we jump in, if you find this discussion helpful, please do remember to subscribe, like, and comment. We really do love hearing from you. Also, if there's a specific company you want us to look into, just leave a comment below after you've heard this.
Yeah, what's interesting here is that Galectin Therapeutics, ticker GALT, it's almost a textbook case, isn't it? It shows that high stakes, high reward, but also, let's be honest, high risk world of clinical stage biotech. So we'll be looking at its past performance, some upcoming events, and crucially, the fundamental health of the company to give you that well-rounded view. It's quite a story.
Okay, let's unpack that then. Galectin Therapeutics, a clinical stage biotechnology company. Now, for many of our listeners, that term itself flags certain things, but what specifically about Galectin's stage and its focus on liver fibrosis makes it stand out for investors right now?
Well, essentially, being clinical stage like Galectin means, fundamentally, they have no approved products out there. No revenue coming in from sales. Their whole focus is on developing therapies. In this case, it's for liver fibrosis and MASH cirrhosis. That's a severe type of fatty liver disease. Their main drug candidate, belapectin, is what we call first-in-class. It's a Galectin-3 inhibitor.
First-in-class, meaning it's a totally new approach.
Exactly. It targets this protein, Galectin-3, in a novel way. That differentiation could be a real advantage.
Yeah.
But, and this is the big but, it also means their entire future really hangs on whether the clinical trials work out and if regulators like the FDA give it the green light. It's basically an all-or-nothing bet on the science paying off.
Right, okay. Let's rewind a bit then. The last 3 months have been pretty active for Galectin, haven't they? I mean, back in September 2025, we saw its shares jump, what was it, 18.8% in just one day, closed at $5.94. There was huge trading volume, lots of buzz. What was behind that kind of surge? And we saw renewed institutional interest too, right? Like Hightower Advisors upping their stake.
Indeed. Those sharp moves often reflect, a mix of real excitement and maybe some strategic positioning. If you go back to August 2025, the company presented some genuinely positive results from its Navigate trial. That's for belapectin in MS cirrhosis patients. They presented this at ESL 2025. That's a major European liver conference, so data presented there gets noticed.
And the data showed.
It showed efficacy, specifically reducing liver stiffness and clinical progression. That's significant in the MS field because, well, there are no approved therapies yet. And financially, they also reported a slightly reduced quarterly net loss, about $7.6 million. Plus, they secured a new $10 million credit line from their chairman.
Oh, okay. More runway, potentially.
Right. They project that this funding will last them through June 2026. And all this positive news led H.C. Wainwright, an analyst firm, to reiterate their buy rating with a $6 target. Yeah. So, yeah, definitely a wave of optimism then.
That does sound like a lot of good news packed into a short period. Suggests momentum, but, it's never quite that simple, is it? I seem to remember back in July 2025, things weren't quite so smooth. There was that day with a big trading range, nearly 14%, and the stock actually finished down over 3% on July 18th. And even though the short-term trend was up, didn't a technical sell signal pop up around then? Something about MACD crossing negative, so it wasn't all plain sailing.
That's a very sharp observation, and it really highlights the volatility you get with these microcap biotechs. Even when there's good news floating around, the market can react, well, unpredictably. That MACD crossover, that technical signal, well, you never rely on just one indicator. It suggests some traders saw it as a chance to take profits, or maybe they sensed a momentum shift despite the good news flow. It's just a reminder that good news doesn't always mean the stock price goes straight up. Sentiment, technicals, the wider market mood, they all play a part. You're betting on market psychology as much as the science.
Right. Makes sense. So we've looked back, but investors always want to know what's next. Let's shift gears and look ahead. The next 3 months seem to have some pretty clear potential catalysts lined up for Galectin. What should people be watching?
Absolutely. This is where it gets really interesting. There are several key dates, potential inflection points. First, September 27th, 2025. We're expecting an update on the Navigate trial enrollment.
Why is enrollment so important?
Well, trial enrollment speed dictates the timeline for getting results. A good update suggests the trial's on track, management's executing well, it's a key operational milestone. Then, mid-October, around the 15th, we get the Q3 earnings release.
Right, the numbers.
Yeah, but it's more than just the net loss figure. Investors will be digging into R&D spending, the cash burn rate, and really parsing management's comments for clues about future funding needs or timelines.
Okay, what else?
Looking a bit further out, October 31st, there's a potential for Galectin to be included in a small-cap ETF. This happens during index rebalancing.
Ah, the passive inflow effect.
Exactly. It's not about fundamentals, but if funds tracking that index have to buy shares, it can create demand, push the price up, at least temporarily. Then late November, around the 25th, the institutional holdings report comes out. That shows us if the big money is buying in, selling out, or just holding steady. Gives a sense of broader sentiment. And finally, December 5th, Q4 guidance and the year-end update. This is crucial for understanding management's view on pipeline milestones for 2026, and critically, if they think they have enough cash.
So quite a few potential flashpoints coming up.
Definitely. These aren't just calendar dates. They're data points that could significantly impact the stock.
Now, beyond those scheduled events, there's always the rumor mill, especially in biotech, whispers and what-ifs. What are some of the more, let's say, provocative possibilities floating around for Galectin? Things that could really change the story, even if they're uncertain.
Yeah, and this really underlines the speculative side of investing here. In clinical stage biotech, rumors can sometimes move the stock almost as much as actual news. There are definitely whispers about potential partnerships or even M&A activity. Some people are suggesting big pharma might be interested in belapectin's potential in MNOs.
That would be huge, obviously. MNOs is a massive market with no approved drugs yet.
Precisely. It's not just wishful thinking. A big pharma deal could bring in vital cash, validate the science in a big way, and completely change Galectin's outlook. A high impact, but, highly speculative.
Okay, what else is being talked about?
There's also chatter about whether Galectin might try for accelerated FDA pathways, things like breakthrough therapy designation. If future Navigate data is exceptionally strong, getting that kind of designation could significantly speed up development and review, potentially saving years.
Right. And you mentioned ETFs earlier.
Yeah, linked to that index rebalancing idea, there's speculation among investors about the potential for significant ETF buying if the stock manages to consistently stay above certain price levels. Sustained, mandated buying.
Okay. And one more.
And finally, given the stock's volatility and the amount of short interest, some retail investors are definitely keeping an eye on the possibility of a short squeeze.
Ah, the squeeze play.
Yeah, where rising prices force short sellers to cover their positions by buying back shares, which can push the price up even faster, even if only temporarily. So yeah, M&A, faster FDA review, ETF buying, short squeeze, all potentially game-changing, but none of them guaranteed. Built on rumor, not fact. It's like watching a high-stakes poker game.
A lot of what-ifs. Okay, so we've covered market reactions, future catalysts, rumors, but what about the foundation? The financial health. Let's crack open Galectin's books. What do the fundamentals tell us about revenue, earnings, and just their ability to keep going?
Right, the fundamentals.
Be-
And as we said, being clinical stage means, predictably, zero product revenue in their latest filings. None. The company's still operating at a net loss. For the first 6 months of 2025, that was $17.152 million.
Though you mentioned that was slightly better than the previous year.
It was, yeah. A slight improvement, mainly because R&D spending decreased a bit, but it's crucial to understand they don't give revenue or profit guidance because they have nothing to sell yet. Continued net losses are just baked into the model at this stage. It's all about the cash runway and the potential down the road.
Okay, typical for the stage, but what about that runway? Financial resilience, given the cash burn, how secure are they?
This is where, frankly, the picture gets quite stark. As of June 30, 2025, they had $13.771 million in cash. But you have to look at the other side of the balance sheet. Total liabilities stood at a pretty staggering $132.769 million.
Wow, that's quite a gap. Where does that liability come from?
A huge chunk of it, over $88 million, is borrowings and accrued interest, mostly on convertible lines of credit from related parties. And maybe even more concerning, they have a stockholders' deficit of nearly $119 million. That means negative equity. Their liabilities exceed their assets.
Negative equity.
And then, while their cash used in operations improved slightly, management themselves put it bluntly in their filings. There is substantial doubt about the company's ability to continue as a going concern.
That's the official warning language.
It is. They believe the available credit, including that new $10 million line, should fund them through June 30, 2026. But that explicitly flags that financial stability beyond mid-2026 is a major question mark. It suggests that even if the science looks good, they'll almost certainly need to raise a lot more money, likely through issuing more shares, which dilutes existing shareholders. It's a serious financial tightrope.
Okay, that paints a much clearer and maybe more concerning financial picture. How does Galectin then stack up against competitors in this tough biotech space? And what are the big risks investors need to weigh?
Well, first off, you have to remember Galectin is a small cap player. Tiny, really, compared to the giants in the liver disease space. They have no approved products, and Galectin faces intense competition from companies that are much larger, much better funded, with deeper pipelines. Think Intercept, Madrigal.
Companies that are also working on MSH or related areas.
Exactly. While belapectin's first-in-class mechanism is different, it's just one approach among many being tested. So its competitiveness really hinges almost entirely on getting stellar trial results, and that regulatory approval, it's far from guaranteed.
And the broader risks beyond competition.
Well, you've got that going concern risk we just hammered home the company itself, warning about its financial viability. Then there's the inherent binary risk of clinical trials. One bad readout, especially for a company with only one lead asset this far along, can be absolutely devastating to the stock price. And finally, the very high likelihood of future shareholder dilution. Given their finances, raising more capital by issuing new shares seems almost inevitable. That reduces the value of every existing share.
So a classic high-risk profile, maybe even higher than typical given the financials.
I'd say so, yes.
Yeah.
The potential reward is there if belapectin hits, but the risks are substantial and clearly spelled out.
Okay. For our listeners who really watch the charts, let's touch on the technicals. What's the price action telling us right now? Any clear signals?
Looking at the recent charts, say over the past month, the stock's been trading in a range roughly between $4.10 and $5.20. It closed around $4.60 on September 5th. So you can see potential support where buyers might step in or around that $4 to $4.20 level. And resistance where sellers might take over seems to be around $5 and $5.20.
What about indicators like moving averages or RSI?
The 50-day moving average is hovering right around $4.70, very close to the current price. That suggests, a pretty neutral or sideways trend right now, despite the recent ups and downs, no strong direction being signaled there. And a relative strength index, the RSI, it's been drifting between 40 and 55.
So not overbought, not oversold?
Exactly. It's sort of in no man's land, technically speaking.
Yeah.
Not indicating an immediate reversal is likely from either extreme. Other momentum indicators like MACD are also pretty neutral. No obvious bullish or bearish divergences suggesting hidden strength or weakness. Overall, the volatility is moderate, which is kind of what you'd expect for a less liquid, event-driven microcap biotech like this. The charts aren't really screaming buy or sell right now. They're more like whispering wait and see.
Okay, neutral signals from the charts then. So let's bring it all together. We've looked at the science, the finances, the catalyst, the risks, the charts. For that listener asking, is Galectin Therapeutics a good time to buy now? What's the overall take? What's the investment thesis summing this all up?
Well, if you boil down the analysis from our sources, the overall rating comes out quite low, a 2 out of 10.
2 out of 10. Okay. Why so low, despite the potential?
The pros are significant, but they come with huge caveats. Yes, there's potential for high upside, but only if belapectin succeeds in late-stage trials and gets approved. That's a big if. And yes, they have a focused pipeline with a clear scientific idea behind it. That's a positive. However, the cons are really substantial and very present. You've got elevated near-term financial risk, the negative equity, less than years guaranteed funding runway by their own estimates, that explicit going concern warning.
Right, the financial red flag.
Exactly. Plus, no revenue, ongoing losses, and that very high risk of shareholder dilution down the road. You layer on top of that the inherent risks of the biotech sector itself, the binary nature of trials for a microcap. It paints a challenging picture.
So the recommendation would be?
Based on this, the investment horizon suggests it is strictly speculative short-term trading only. It's explicitly noted that long-term investment really isn't advisable unless you have extremely high conviction in the clinical data, you really understand the science deeply, and you have a very, very high tolerance for risk and binary outcomes. The stock's fate really does seem to hinge almost entirely on specific clinical or regulatory events. It is absolutely not for the faint of heart, nor for capital you can't afford to lose completely.
Okay, speculative short-term trading only. That's a very clear takeaway. It means it's definitely not for everyone. Careful, maybe even ruthless assessment of your own risk tolerance is critical here. That was a really thorough breakdown of Galectin Therapeutics. It's clear there's this fascinating tension, isn't there? Exciting scientific potential on one side, but very real, significant financial and competitive hurdles on the other.
Absolutely. It really is a prime example. With Galectin, you're essentially looking at a high-reward gamble on science and regulation working out, but it's heavily weighed down by these financial headwinds and the almost certain need for more cash. It perfectly captures high risk, high reward, but it maybe emphasizes the high risk part right now.
So, what does this all mean for you, the listener? It means understanding that full spectrum is vital. From Belapectin's scientific promise, which is real, to the stark financial realities and the tough competitive environment, you need to see both sides before making any decisions. The Galectin story is definitely not over. It will keep unfolding with every trial update, every financial report. Maybe the thought to leave you with is this. In a situation where so much depends on an if, how much if are you truly comfortable investing in? Keep learning, keep digging deeper. Thank you for joining us on Investing Talk podcast. We really hope this analysis has given you valuable insights into Galectin Therapeutics and helps you think critically about your own investment choices.